The following program paid for by Rosenberg Financial Group. Providing live finance advice since 1993. It's time for Your Money with Steve Rosenberg, Sherri Goss, Randy Goss, and Becca Wilton. To participate in today's program, call 478-742-0940 with your financial questions and comments. And now, live from the Macon studios of News Talk 940 WMAC, it's Your Money.
Good morning, Middle Georgia. Becca Wilton and Sherri Goss are here to take your calls, 478-742-0940. And Becca reminded me that we need to tell you to get out a pen and a piece of paper because we're going to do a quiz later. And if you're getting ready to retire, this might help you figure out what that's going to be about. But anyways, let's start off with the market recap. You had something you want to talk about, Becca?
Yeah. So early in the week, there was a sell-off, but the week ended flat to modestly higher. So there was a little dip earlier in the week, but it did end up better by the end of the week. On Monday, the S&P recorded its biggest daily drop since May 12th. Longer-term bond yields rose sharply over the week. Energy stocks outperformed within the S&P 500 while utility shares lagged. The major factors in the downbeat start to the week was the fears around the Chinese the property default, and we'll talk about that later. On Wednesday, the stocks regained a large portion of their losses, possibly because there's news of the restructuring plan for the Everglade, which is that China property development. We'll talk about the Fed two-day meeting. Yeah, we'll talk about the meeting later. House sales strengthened but remain below the 2020 peak, and the first-time jobless claims, so the people that are applying for the first time, rose to 351,000.
Where are those people?
I don't know, like 351,000 new people filing for the first time.
They must be in some pocket somewhere where there's God knows what going on. Because around here we could sure use a few of those people to apply for jobs.
We got all sorts of jobs. Call Sherri and I. We will tell you where the jobs are.
But anyway, so the Federal Reserve on Wednesday telegraphed it could hike rates 6 to 7 times by the end of 2024. But that sounds crazy and scary or whatever, but the honest truth is they're talking between now and then the rates only being 3%. So this is how the news works. So typical news media wants to say something that sounds scary to get your attention because you have this thing in your head called the amygdala. It is a part of your brain. And back when you were living in a cave and having to hunt for food with a spear, it was very handy because you would be scanning, your eyes would be constantly scanning the horizon looking for something scary to run away from. Well, we don't need that anymore unless you're on I-75.
Or downtown Macon.
There you go. It comes in handy there, but it's happening. It works in your head all the time. So when you turn on the news on TV, they're going to lead with some scary headline, and at 5:29, if you started at 5, at 5:29 they're going to do a 30-second of what that really was, and it was a nothing. Because This is how it works, and everybody is doing this, and so they're going to have a headline because they want you to click on it if you're online, because that's how they sell advertising, is clicks. And so be careful what you believe, and be careful what you look at, and be careful what you allow in your mind and what you allow to be scared about, because a lot of times it is not scary, and the Fed meeting is exactly that. So they're going to be meeting again.
I think November and December, they had 2 more meetings this year.
So since the depths of the pandemic, the Fed has been absorbing about $120 billion a month in U.S. Treasuries, and this is how they create the money to do the things that they've been doing. And so once they get to a stopping point of tapering, they'll taper that dollar amount back, and then they have to pay that money back. And that's where the tax stuff comes in, where they want to raise taxes on everybody. So nothing happened now. We'll keep an eye on it November and December. And was there anything else in here that was important?
I thought it was funny, and I think we have another article that says it, too, about the meeting. The updated forecast now has the committee split on rate hikes in 2022. So we're talking about next year, and there's 18 members, and 9 members see a case for no rate hikes, and the other 9 see the case for at least 1 hike. So it's just really funny because it's like kind of 50-50. Well, maybe we could, maybe we couldn't.
We're talking like less than 0.5%. I mean, really, they're turning this into some big thing. It ended up being a nothing. The market went back up, so just relax.
All they have to talk about right now.
Yeah. So Randy and I went out to dinner the other night. I wanted to throw this out there. For any of you who have grandchildren or kids that are in high school, this guy sat next. We like sitting at a bar in a restaurant because we like sitting next to other people and having conversations because we're weird like that.
Well, it's really weird if you're sitting at different tables and you try and jump in their conversations.
That happened the other day, though. We did that the other day, and they ended up coming over to our table and talking for a half an hour. But we just like talking to people and meeting people. And so this guy sat down next to me. We started talking, and it turns out he works for Frito-Lay. Really nice guy. And I said, what do you do? And he's a mechanic. I said, well, I used to go down, you guys used to have this Founders Week thing where I would come down and have literature for a week to hand out on can you afford to retire, when to apply for Social Security, and I would talk to people, and it's such a great environment down there. I love that place. And he said, yeah, it is great, and I think he's been there 35 to 40 years. I can't remember what he told me. But he said, and I said, so what I learned the last time I was there is you guys were going to the high schools in Houston County and talking to freshmen and sophomores and telling them, do dual enrollment junior, senior year, get your pre-engineering degree, come and work for us through a 5-year apprenticeship where we will pay you and you will learn a career and have a job for the rest of your life because they are all about automation and robotics down there. And he said, well, guess what? We had to throw that out the window. I've been telling everybody about this thing, and it doesn't exist anymore.
So crazy. It sounds like such an amazing offer and a great deal.
But he said it doesn't exist anymore because we couldn't get anybody to do it.
How is that possible?
How are you functioning? He said, we're so short-handed in every direction. We're short of jobs. We need people for all positions. He said, and I'm a mechanic, so here's what we're doing now. He said, we're hiring high schoolers that graduate from high school with no education and training, and I'm training them to be a mechanic.
And
they're going to have a career for the rest of their life because there are no mechanics. And so if you know a young person that doesn't quite know what they want to do, they should seriously look at Frito-Lay. If you live in Warner Robins, Houston County, Perry, phenomenal employer, and they're doubling the size of the factory. It's the largest PepsiCo company in the world, and they're doubling the size because people are eating so much garbage.
They've got great benefits.
Sodas, huge, great benefits, health insurance, 401k, the whole nine. So anyways, if you know somebody who's wandering around in the world and doesn't know what to do, it might be a good place for them to check out. Anywho,
so if you don't want to call in because you don't want to hear yourself on the radio, give me a text, Becca, 478-955-8284, and we'll answer some questions. Or if you have questions, that you need me to get back to you, something I need to do some research on, I'll be happy to do that. So just give us a text if you don't want to call. But we love to hear you. So
but thanks for not abusing the fact that she gives out her cell phone number. That could be really bad. But everybody's being really good, so thank you very much.
Yeah, so that's why we keep doing it. But if someone does bad things with it, then we're going to stop. I had a client in this week, and she is a widow, and she asked about widow benefits. And, she has a really good paying job.
For Social Security?
Yeah, for Social Security. And she'll be getting Social Security in, 8 or 9 years. And I really hadn't thought about it because her husband passed away, I think, 18 years ago. So it's just something in my mind that, it's been a long time and, you're taking good care of yourself. But this is a benefit that is available. I mean, her husband, he worked and earned credits. And so there's that Social Security money that's sitting out there that he put back that no one, else would be able to get a benefit from. So I did a little research. And if you're a widow or widower age 60 or older and you haven't remarried, or if you're 50 and you're disabled, then you would qualify for a Social Security widow benefit. And then if you lose your spouse while you're caring for children under age of 16, you can still get benefits. But the benefits are based on how much the deceased would have collected at their full retirement age. And you can start getting it at 60. So in my client's case, by taking it early at 60 versus, later, there will be a reduced benefit. But it said if you're 60, the full retirement age benefit, you can get 71 to 99% of that.
So to me, I've had people who lost a spouse, went ahead and took the spousal option, even if they were working, and used that money to go ahead and pay the house off. Mm-hmm. I mean, so especially if her benefit's going to be higher than his at her full retirement age, because then she can flip over to her own. And so I've seen that work great for a lot of people. In fact, my new widow client that has the 3 kids, she's getting the benefit from her husband, Social Security widow's benefit, and because she has 3 children that are minors, and so she's getting money for each of those kids. And I asked her how it went applying for that, and she had a 3-hour appointment with Social Security on the phone. Because they block 3 hours, and it's like, why is this so complicated? What would take 3 hours? I don't understand. It seems like you should be able to download a claim form and a death certificate through a portal on their website and then deal with the person that already has the data. I don't understand these companies that have nobody's going to work still.
Well, online, it said that they aren't taking any claims online because they're so complicated. Each situation's a little bit different. Like if your client has the children under 16, then she'll get benefits while they're under 16,
right.
And then the kids can get it from 16 to 18 if they're still in school. And then there's that blackout period where she wouldn't get benefits. It's very complicated, I guess. And they said that you can do the phone, or the article I was reading was a little old because it said you could come in and visit people.
Yeah, but not so much.
But, so I'm going to advise my client possibly to take the benefits at 60. Like you said, even though she's still working, she can take them from 60 to 70 and let her benefit grow,
yes.
and not take her benefit until she's 70 and max that out.
That's the good deal.
And get his for 10 years.
Mm-hmm.
So, yeah, and hers will be more by that time. But anyway, so give him a call. Make sure you have a few hours slated for that. But it could definitely be a good benefit.
And there was something else you were going to talk about.
Yeah, I had another widow. What is it with all these poor
It's
people
a
that
lot.
are losing?
We're just seeing a lot of it.
Yes. I had a copy for you. I didn't give it to
thanks.
you yesterday. Tax filing status after the death of a spouse. So the year that your spouse passes away, you can still file married filing jointly. And the tax bracket is going to give you an extra benefit if you need to take any money out of investment accounts or IRAs, anything like that. You're going to have more room in your tax brackets at the married filing jointly. So my client had an annuity that had a large growth amount in it that would have all been taxed. And so we talked about it. This year he can still file married filing jointly, but next year he'll file single. And with his income, he'll be almost maxed out of that 12% tax rate. And so we talked about possibly taking some money this year versus next year. So each situation's different, but if you are going through a situation like that, it might be in your favor to look into taking advantage of your tax filing status the year that your spouse does pass away.
And honestly, I have just seen a lot of widows ever since I came to work with Steve, because they're blown out of the water and they have money. The spouse had money everywhere. They have property. It's just overwhelming. And to sit down and talk with somebody to help you organize your thoughts and at least create a priority list of what's most important, what's urgent. Urgent is figuring out what your household budget is and whether you have enough cash flow. Next is taking care of death certificate and claims, life insurance I'd put next, moving investment accounts. But it's so overwhelming to just sit down with somebody and create a list of what's the priority, what's urgent, and what's not. Is very helpful.
Yeah, so come and see us. We'd be happy to sit down with you and, like Sherri said, kind of make a list for you of, like she said, kind of the urgency list. And then even down the road further, I had this client, he brought in a paper that was from some bank he'd never heard of and had no idea. So we sat on the phone and got through, and there was like $800 in the account, but he never even knew she had this account.
Wow.
It was like some old stock or something.
See, this is a problem, and that's why I wrote the Life Book. And the Life Book is free on our website, retirerelax.com. You can download the fillable PDF, or you can print the pages out, and you go through the Life Book, and it walks you through how to get all your stuff in order so that when something happens to you, the person you're leaving behind knows where everything is, all the bank accounts, all of your contacts, your CPA, all of that stuff, your will, power of attorney. So check that out if you're feeling the need to do something about that. So
do your family a favor and take care of that ahead of time.
So I was talking to a widow this week, a client, and her husband died unexpectedly a few months ago, which was just tragic. And she's looking at preparing the property for sale because it's just overwhelming and it's too big. And it's a whole other problem that people have. It's just a big, huge ordeal. And so we were talking about it, and she's having it valued. And I told her, I said, because he passed away this year, remember that you get a step up in cost basis for 50% of the property because it was joint tenant with right of survivorships on the deed. And then when she turns around and sells it, she gets a $250,000 exemption because they've lived in it over two years of the last 5 years. They've been in there for 35 years, but the rule is 2 years out of the last 5 years. If you were living in the property, you get the $250,000 each step up in cost basis, but his will be the death step up. And so she won't owe any tax on the profit she's going to make off that property, which is a great thing.
Yeah, and it's something that most people probably don't think about, and who knows if their tax accountant thinks to tell them. So
right, yes.
Come see us. We'll bring those things up. We unfortunately have experience with that and can help guide you through it.
So there's a great book out there if you're interested in what I'm going to talk about next. The author is Ken Dykewald. And years ago, Steve and I read his book called Age Wave. And then he just came out with a book called What Retirees Want. And it's very good. I read it and I created a program. In fact, if you heard me talking about speaking at Watercrest Senior Living, this is the program that I did there because Watercress Senior Living is all about having the lifestyle you want in retirement, even if you have some incapacitation. So I'm just going to go down this a little bit, and so jump in, Becca, whenever you want to. Here's the background of the book. The American retirement landscape is changing. According to studies, increasing numbers of older men and women are not interested in acting their age or retreating to the sidelines. They'd rather rebel against ageist stereotypes and be productive and involved. Look at John Glenn. They and we, because I'm 60, I feel that I'm living this article, see retirement in a different way than previous generations. Passive leisure is being replaced with adventure travel, edutainment, and voluntourism. During the past decades, there have been a great deal of focus on helping people add years to their lives. Now it seems they want to also add life to those years.
And add value to their life and other people's lives.
There are approximately 68 million retirees in the United States. We are 21% of the population.
Isn't that
I don't know.
crazy?
I guess I'm not counted in that because I'm not retired. So it's just the numbers are wild. And here's how they are changing the concept of retirement. So work. 7 in 10 baby boomer workers expect to work past 65, are already doing so, or do not plan to ever retire. And I have a number of clients that do not plan to ever retire because they're like, what would I do? I'll lose my mind. I completely get that. That's how I feel. I mean, I just don't know.
And that's where we talk about practicing for retirement and, having hobbies and extracurricular activities. But for some people that have always worked, and I mean, some people just don't have that personality. Right.
And they like what they do, and they make great money, and they enjoy the environment, and so it's okay.
Some of them, it just depends on your career, because like as a surgeon, at some point, you don't want probably an 80, 85-year-old surgeon operating on you.
According to the chief medical officer for AARP, as you age, your brain doesn't process information as fast. You might not remember everything, and you're not as quick as you once were, but on the other hand, you're a better problem solver. You have a better vocabulary, better pattern recognition, better executive function. You get wiser and have more of the creativity that comes from experience. There's growing data showing the value of cognitive diversity on teams, and the best cognitive diversity comes from age diversity, more than diversity of gender, ethnicity, or background. Qualities from the heart like empathy and the ability to connect are essential to nearly every role in society. And those are the qualities that peak as we get older. So everybody out there that's retired, you are adding value wherever you go because of your knowledge base. And this is why my clients that are in their 70s, the companies beg them every year, please come back. Please come back to work, because the new people that we're hiring, the young people, do not have your capacity or your capabilities or your experience and knowledge.
And I have several clients in probably their mid-60s that are wanting to retire, but just like you said, their companies don't want to lose them, and they're afraid of, maybe you not having things to do. And I have several clients that are going down to like 3 days a week or two or 3 days a week.
That's a huge trend.
So the part-time thing is great because you're still getting to do that. You're still getting the income. The company's still getting the value of, all your expertise.
It's a win-win. Yeah, if it's possible. So
it says worldwide over the next 20 years, retirees will have 50 trillion hours of leisure to fill.
What are they going to do?
And let's hope they're not watching TV.
What can we sell these people?
There we go.
I mean, really.
Horseback lessons. Sherri and I are going to come up with something for you all to do.
So health. It is impossible to imagine, and I get this one big time. It is impossible to imagine what retirees will consider doing and spending to retain their health as long as possible. We're not going to tolerate poor eyesight, poor hearing, or chronic pain. We're going to want someone to do something about it to improve your quality of life. And I'm an example. I had PRK last year. It was so worth it for me because now I have a 1.0 reader for my right eye, and I can see and drive and read, and I have I'll do it again. I'll spend the money on the cataract thing when I do that to have a reader and a distance eye. But look at the people that are going and getting things fixed that maybe in the past would have thought, well, I'm too old for that. It's like that doesn't exist now.
Well, and I was listening to someone speak the other day, and they were talking about all the medical technology, and probably in 10 years, say you're 65 or 70 in 10 years, the chances of living to 100 or plus are going to be exponentially bigger because of all the, advances they're making. But just like you said, I think you had a client, people that didn't usually take care of things, but I think you said she was like in her 90s and she was getting all of her teeth pulled and getting new dentures.
Yes, 90.
And I was like, at 90, who wants to go out and have all their teeth pulled?
She wants to have nice looking teeth. She's still very attractive. She looks amazing for 90. It's crazy.
And that's awesome. And, like you said, but most 90-year-olds weren't doing that. She may lived 105, 110.
Right. So how many of you research health information online? This is interesting. So 18% of your parents did. Well, they probably didn't have internet most of their life. 79% of you research it. How many of you question your doctor's orders? 29% of your parents did. 70% of you. I question everything the doctors say. They cannot stand me because I ask questions.
She keeps charts and graphs.
Yeah. How many of you view your doctor as an authority? 52% of your parents did. Only 21% of you. We question. Our generation questions everything. I don't believe anything firsthand. I go look it up later and confirm what you're telling me is true, because they can't know everything off the top of their head. I mean, it's impossible.
Well, and we see so many instances where there is wrong information given out, or, there's examples of where that isn't the case.
Yes.
The family is reported as the number one greatest source of satisfaction in retirement. A recent AARP study found that 45% of grandparents keep in touch with their older grandchildren by texting, 38% by video chat, and more than 25% by email and Facebook. I know I have several clients that do the FaceTime and really enjoy it. I was talking to some potential clients yesterday, and they have a son that moved to Hawaii, and they said they haven't seen him since 2018. They're like, well, we see him on FaceTime and stuff, but we haven't seen him in person. And so I said, well, once you retire next year, would you go visit him? And he's like, we've been to Hawaii. No, we see him on FaceTime. We're good. We're going to go someplace new that we haven't seen before.
That's funny.
But today's retirees enjoy new freedom in where and how they live. We've never had more people living full-time in RVs as we have today. You have several clients. Yeah.
It's an option. You can do it, and there's websites that help you figure out how to make it happen.
And it's not as weird. Like, now these people do the tiny homes and all the downsizing, so maybe it doesn't seem quite as weird as that person that just takes off in their RV across the country.
So purpose. A strong sense of purpose keeps retirees more active, healthier, and happier. They believe that retirement is the best time to give back, and they are the most charitable generation in history, accounting for 40% of money donated and hours volunteered. The bottom line is a retirement one-size-fits-all doesn't cut it anymore. This next thing I think is interesting. Every day, 10,000 baby boomers are turning age 60. This has never happened in the history of the world. The sheer force of our purchasing power and our expectations for retirement are creating change in the economy. In America alone, grandparents spend an estimated $18 billion on clothing for their grandkids, $15 billion on toys, and $10 billion on vacations.
Crazy.
They purchase 25% of all toys, 40% of all children's books. You should go to Gottwald's and Salvation Army, just a tip, and 20% of all video games. They also contribute to college savings accounts at an estimated amount of $24 billion. 1 in 5 grandparents has taken a Disney vacation with their grandchildren. Has anyone out there done that? In the past, people would have said, aren't you too old to be doing stuff like that? But the world has never experienced old people like us. I just think this book was really good. I really enjoyed it.
Well, I was talking to my clients yesterday, and they said that, they've watched what their parents went through and saw, some good examples and bad examples. The people yesterday, both of their parents had smoked, and they had stopped, like in the 80s, but they still had some, residual effects from that. And the father didn't like to travel, and he got really sick, and so the mother couldn't go anywhere. And so she never got to travel in retirement, and so they're wanting to start a little earlier instead of work until you're 70 or 75 and then being too old, or maybe not too old, but just having the health issues that, you develop over time. And so I have more and more people that say, we want to get out and do stuff while we still can and are able.
So the first part, I'm going to skip that next section. The first part of this is to figure out what's important to you. So here's where the quiz comes in. So get your piece of paper and your pen out, and we're going to ask you a few questions. So number one question, and this is all about you figuring out what you really, really want in retirement. That's the foundation of this whole deal. Number one, imagine you are financially secure, that you have enough money to take care of your needs now and in the future. How would you live your life? Would you change anything? Let yourself go. Don't hold back on your dreams. Describe a life that is complete and richly yours. I'll let you do the next one.
Okay. So now imagine that you visit your doctor, who tells you you only have 5 to 10 years to live. You won't ever feel sick, but you'll have no notice of the moment of your death. What will you do in the time you have remaining? Will you change your life, and how will you do it? And so the question doesn't assume unlimited funds, but what would you choose to do in that last few years you have left?
Finally, imagine that your doctor shocks you with the news that you only have 24 hours to live. Notice what feelings arise as you confront your very real mortality. Ask yourself, what did you miss? Who did you not get to be? And what did you not get to do? And as a side note, I have the 5-year story. I went to a doctor because somebody noticed something. I won't go into the details. Thyroid nodules on my thyroid. I was literally talking to a doctor downtown while they were having dinner, and he noticed I had a nodule on my thyroid. And so I had to go through the hoops of going to the people and having it the scan and all this junk you have to do. But the first nurse I talked to at the doctor's office where I went, she said, the good news is if it's cancer, you've got a good 5 years. And she said that right off the top before she even did the
biopsy thing.
The biopsy thing. And I'm sitting there and my head was just spinning, and then they went and did the biopsy, which was very painful, and then they did this scan and they found more of them. So she's talking about while she's doing all this, and they have to send it to Texas, and it takes 2 weeks to get the results back and whether you have cancer or not. But the 5-year thing really threw me for a loop for about a month. I mean, even after I got the results back and it wasn't cancer, it just, like, 5 years, what would I do?
When someone speaks that to you and you just hear that, and like you said, the shock of it.
I couldn't even figure out what I wanted to do because it was so, but anyways, so the purpose of the questions are to help you focus. So the first question is easy. There's a lot of things we do if money were no object, but as the questions progress, they're like a funnel. They become more difficult to answer, and there are fewer possible responses. So he calls this life planning. So most people, the first response they think of is relationships, spending more time with family, and then they have other things that people think about. But really think about what it is that's important to you and how you want to spend your time. And then the other piece of this that they talk about in the book is longevity. So there's a website, livingto100.com, and I would highly encourage you to go to that website. If you think, well, my family all died in their 70s, that's what it's going to happen to me, I guess I'll just spend all my money. And I've had this, where I've had to arm wrestle with people and tell them you could live another 10 years. You cannot just spend down all your money and expect to be okay. So go to livingto100.com, 100.com. It's free. You answer a bunch of questions about your lifestyle, your family history, and all of that. I did it, and it says I'm going to live to 100. Another 40 years.
I'm only going to be 94, so.
I don't know what I'll do for 40 years. It's just nuts. But anyways, just some things to think about, and don't plan on dying early. That's really a big deal. You can't depend on that. And so if you want this, the thing that I've been reading from, or if you want the handout that I used, or if you want me to come to your business or your church or someplace and talk about this stuff, be happy to do it. Just call me at the office, or you can email me, Sherri, Sherri, at rfmoney.com, and I can share this stuff with you if you're interested in it.
So give us a call if you have any examples or anything you'd like to share, 478-742-0940. You can text me if you don't want to be on the radio at 478-955-8284. And like Sherri said, we'd be happy to come out to your business, your community groups, speak on this longevity or any subject. We can talk about Social Security, retirement, estate
financial
planning. Give us a call, 478-922-8100 is our office number, and we'd be happy to set up an appointment with you. We have a lot of people that just come in and want to run their ideas by us, sometimes help them get on a better course or, validate that what they've been doing is great. But it just really helps to have a third person kind of validate what you're going through. So give us a call. We'd be happy to set up appointments. They're complimentary. We just love to get to know you and see if we can help you.
Perfect. Do you want to take the container ship article?
Yeah.
I thought this was really fascinating. There's a lot of good data in this thing.
So if you've been listening to the news, I'm sure you've seen, all the information about the shortage of truck drivers. Trucks aren't getting places. There's bottlenecks in the harbors. And I never really thought about the containers. And
right.
So this is talking about the big, huge containers that are on the ships. They're 40-foot containers. And the person that's telling the story, they actually moved from Dublin and shoved all their stuff in one of these containers. And then because of all
Dublin, Ireland.
Yeah. They moved all the way from Dublin, Georgia.
Across the water, not just down to I-75.
And they've been waiting for their things, and they're in an empty house right now because of the delays on all of the shipping. And these containers, they're running out of containers now. And it's just amazing that the world supply chain is nervous over the economy and saying that, the shipping containers are a huge part of this. Around 90% of total world trade in goods is transported by the sea. I was really surprised at that. It amounts to about $14 trillion in 2021, equivalent to about 2/3 of the U.S. gross domestic product.
That's just huge.
And 60% of that's carried in shipping containers. So they're normally 20 to 40 feet long, and, you can have them on the ships, and then they can be moved to the trucks. Shipping things in big boxes rather than break bulk cargo, which is when the items are stowed individually. It might seem obvious, but the widespread adoption of containers, which could also be loaded onto the truck or rail car, was revolutionary in the 60s and 70s. And so it really changed the way they move things. But now that we have so much stuff we're trying to move, we aren't keeping up with it. And they the containers it used to be about $2,000, and now they're $7,000 a piece. And from China, the price has quadrupled to $22,000 per container.
To buy one.
Yes.
That's crazy. And that's where most of them are made, unfortunately.
And so they're shipping all these things over from China because we have so much that's imported, and then these containers get to the U.S. and they don't have enough to export, or they don't have the time to fill them. And so they're shipping these empty containers back across, where in a perfect world, everything from China would come over, they'd dump it out, and then they'd put more stuff in it and send it back and, make more sense. But there's such a demand, and they don't have the time because they're trying to get these ships back out into the port so more can come in. It's just amazing. I never thought about some of the bottlenecks that are causing all these supply chain issues. It said there aren't enough containers. It's as simple as that. They might look like simple steel boxes, but 3 Chinese companies produce 80% of the world's containers.
Why didn't we notice this? Why didn't we do something about this?
We should have started building containers.
Right.
Prices of containers are up more than 50% over the past year. And there's also not enough container ships. And so it can take 3 years and upward of $200 million to build a ship. So they're going to build all these ships, and then they're going to get caught up, and then they're going to have all this extra stuff. Mm-hmm. It's just amazing how the supply and demand are causing so many issues with this. So the ships and containers we have aren't in the right place. So again, what I was talking about, the containers are often empty as they drop off their cargo and they go back empty.
So America's trade deficit with much of Asia and China in particular has added to the strain. Lopsided trade relationship leads to empty containers headed for China. Over the first seven months of 2021, with the vast majority of trade in containers, the U.S. imported $270 billion in goods from China and exported less than a third of that back. So you got a 2-to-1 ratio of empty containers. So in normal times, 2/3 of the containers leaving we already talked about that. In early August, a single COVID-19 case caused a partial shutdown of a port in China, the world's 3rd busiest container port.
Isn't that crazy?
Mm-hmm. What's more, the economy-wide labor shortage, also related to post-pandemic surge in demand, has slowed operations at ports in the U.S. and everywhere because they can't get people to go to work.
And then there was that blockage of the Suez Canal where the ship,
they had
that problem back in March. It said close to 300 vessels were held up, adding another choke point in the already dazed supply chain. It says one of the results has been that the ships, they're piggybacking containers, sometimes taking strangely different routes to get to their destinations.
The other problem is back in the 70s, Toyota Motor changed their manufacturing. So automobile companies used to have all these parts and warehouses of parts, so they would build these cars. Well, then they got into this just-in-time manufacturing, and so everybody's switched over to that. So you don't have warehouses full of parts. You get the parts when you need the parts. So you're not wasting all your money buying all this material that you may not ever use because things evolve and change. And so everybody's in the just-in-time manufacturing. So it says the iPhone, for example, sources inputs from a network that spans 49 countries to make their product. Vaccine maker Pfizer has more than 5,000 suppliers. And so you're sourcing from all over the world. You're not getting it from one place. And so now this supply chain has just disrupted everything in a massive way.
And with all the semiconductor chips, the shortage of that, all these things are stuck at a bottleneck because they can't get their chips.
Is there anything else in here worth talking about? Oh, I thought this was interesting. Home Depot and Walmart are contracting their own ships to transport goods rather than relying on middlemen shippers, but their ships will still be subject to the same supply chain constraints as everyone else. Meanwhile, there's a bull market for logistics experts. Forget finance. Supply chain management is the pandemic era's must-have MBA degree. No kidding.
I know. I had someone their child just graduate with a degree in logistics.
Yes.
So logistics, supply chain management, that's what's needed. Plus, if you're in this area, the base would, I'm sure, hire you with a degree like that.
Right. Anyways, anything else on this one that I missed? Or we missed?
It'll just be interesting. It says, but once all the new capacity hits the market a few years down the road, it'll possibly create a glut and bring about the collapse in prices for ships, shipping rates, and containers. That will be bad news for the shipping industry, but a welcome development for the health of the global supply chain. So they're going to rush to try and solve the problem now, and it's probably going to create more problems
This is
later.
always the way it works. It's just like the chip shortage, like everything. We always have to, everybody jumps in to fix the problem, and then you have an oversupply. I mean, this is just the way things work economically. It's always been that way. Yeah, it's global. So next we're going to talk about this Chinese company, Evergrande, which is in the headlines everywhere.
Beforehand, you want to jump in and talk about your antibodies?
Yes. So I'm meeting with a lot of clients that are older, that have had the vaccine. I still meet with people, too, that have never had the vaccine and they've never had COVID, and they're in their 70s and 80s. And they just don't want to get it because they have had friends that got sick from it, and they're nervous about it, which I totally get that. I had COVID the first week of January. Randy and I both had it. He went ahead because he has some health issues. He went ahead and got the vaccine. I'm like, why bother? Why should I get the vaccine if I have the antibodies? So I've been going to my doctor, and it's absolutely free. So about 3 months into it, Randy said, you need to go find out if you have the antibodies. So I did the test. I've done the test every 3 months, and I just did it again. And I literally just show up at the doctor, text them that I'm there. They open the door. The blood person comes out, draws some blood. They send it to LabCorp, and then they send me a printout that shows that I still have the antibodies. So here it is. In almost October, and I still have the antibodies from having COVID the first week of January. And so I met with people this week that are not traveling to see their grandkids because they're afraid they might be positive because they don't know how long the vaccine lasted. We should have been testing for antibodies starting last year. We should have been looking at cases of severity of cases and how long the antibodies last, giving vaccines and testing people for antibodies so we could see how effective all this stuff was, because everybody in my doctor's office, none of them had COVID last year, but they all had the antibodies already.
Oh, wow.
So there are people out there that have that work in healthcare that have been exposed to so many sick people. They already have them, but even though they never got sick. So if you're worried about it, just call your doctor and say, can you stop in and get an antibody test? Because it doesn't cost me anything. I've done it 3 times now, and I have proof. Now, in order to go to our conference in October, I'm going to have to go get a test to show that I'm negative, which I think this should be just as good, but people are faking things, and so they want you to have it downloaded on your phone so you can show them the screen and all that, so you're not faking that you had the vaccine or whatever. But
it's just interesting to see 9 months later you still have the antibodies,
right.
And how many people, most people go by a 90-day rule just because that's something they heard, and who knows what's really like. And Sherri said if they would have been doing more research, testing all these people that had COVID and like every 90 days doing these testings and seeing on average how long it really lasts, but that's, I guess, not as popular to do if you're trying to get everybody to get the vaccine.
I think if they did it, they'd find that our herd immunity is a lot better than they believe.
Yes.
And so I don't know if that's part of the problem, that if they don't want that. I don't understand it. It doesn't make any sense. Anywho.
The other thing, Sherri got a text message to pay a bill, and turns out it was legitimate, but just be careful. We see so many people that get questionable text messages, emails, phone calls.
They wanted me to download my credit card through a text message.
That's just crazy.
That's just stupid. I told him it was stupid. I said, don't ever text me again, and she took me off the list. It was a medical provider.
So be careful, and if you have any questions, don't do it, because if you have a question, your spidey sense is going up, there's probably a good reason for it. And
right.
We see people all the time that get taken advantage of, and it's heartbreaking. So just
most people
ask
don't
lots
even,
of questions.
Older people don't even have cell phones, and they don't text. A lot of them. They do not get that technology, so expecting everyone to pay a bill through a text message is ludicrous. Anyways. You want to take on the next thing, this Evergrande?
Sure. So this week, a big headline has been about the Chinese development, their real estate developer, China Evergrande, and the stock market took a dip early in the week because everybody was worried about this. But it's, Sherri and I are going to go through again. The things you hear in the news don't necessarily all apply to you, and it's really not that big a deal for the U.S. But the Evergrande, they have tons and tons of debt, and they had payments due this week. The resolution for the short-term crisis, the company is figuring out a way to pay off its debt or go bankrupt. And the fallout from either outcome hasn't begun yet. So the huge spillover consequences to U.S. investors who aren't directly involved doesn't seem likely. So it can't be the same for people of China. It might affect them more. But Chinese authorities have been telling local government officials to prepare for the possible storm at the end of this road for the debt-saddled property owner. Local governments have been ordered to assemble groups of accountants and legal experts to examine finances around Evergrande's operations in their respective regions. So they're trying to monitor this company.
I thought this was interesting, talking to state-owned and private property developers to prepare to take over local real estate projects and set up law enforcement teams to monitor public anger and so-called mass incidents, which is another word for riots.
I saw that. I was like, public anger. We're ready to monitor that, and then for people to come in and swoop in and take over those projects. Just think if a company owned more than 1,300 real estate developments worth $350 billion. Beyond that, this company has also had business lines in electric vehicles, bottled water, insurance. The company was founded by a man who literally is a high-stakes gambler. He took out mounds of debt. It's reportedly $300 billion in liabilities and owes $75 billion in net interest-bearing debt today.
Which that means your debt minus your cash that your business has.
To fund what many times are speculative real estate deals. So it's not even, and often resulted in giant empty apartment towers.
So I tried looking this up yesterday because I remember years ago, China wants everyone to be happy. Even though it's a communist country, they want everyone to be satisfied and feeling like they have a good life. And so they would create jobs out of thin air by doing construction projects so that everybody could work and make money. They don't want people sitting around idle. They want everybody working and doing something. And so they were creating all of these entire cities that nobody lived in. And this to me smells like a rat because it smells like what the Chinese government was already doing, but now this company's gone out and done it. And they've had people working for them all this time. And I feel like there's something missing in this article about the government being involved. And how did the government allow them to take on that much debt anyways, to blow up? I mean, why would a country allow somebody to do that and then throw down on them for doing it?
Well, and they said earlier this year that the government, they came out with a new policy, and they had all these different levels. If you didn't meet certain red lines, then they were going to fine you or shut you down. And according to this article, there's like these 3 different red lines that you can not pass. And Evergrande was one of the 4 companies that was red in all 3. It breached all 3 of the criteria, so regulators said the company couldn't borrow any more money. So like Sherri said, they are over $300 billion in debt, but why did it get that far before they came up with this program, and now they cut them off? But it said that made business darn near impossible for Evergrande, especially when property sales slowed just last month. It's trying to sell assets and spin off business units in order to pay down its debt.
Meanwhile, the Chinese government seems perfectly content with using the business as an example that it's serious about limiting the amount of debt in the system. Via state-run media, government officials said that Evergrande is not too big to fail.
It's like, why did they wait now? Why didn't they take action earlier? Now they're trying to make an example out of it.
It's really weird.
But,
so that statement in itself is interesting given the history of the real estate market in China. Back in the 80s and 90s, the government started to sell real estate to raise revenues to fund growth across the country. And the buyers were developers like Evergrande. Today, real estate makes up to 29% of their GDP. China is a communist state, and all land is owned by the state. Now, this is very interesting. I've never knew this. In 1988, the government changed the Constitution to allow rights to use land, not to own, to use, to be bought and sold under long-term leases. Residential use typically comes with a 70-year lease, commercial use with 50-year. In the 7 years between 2009 and 2015, the Chinese government collected $22 trillion yuan from selling land. By privatizing this state asset, the government has been able to fund massive infrastructure investment on a scale that the taxpayer would never have been able to bear. Evergrande, founded in 1996, became an even bigger buyer during this stretch. It also became a publicly traded company in 2009 and cleaned up its balance sheet in advance of the listing. However, that didn't last very long. The company immediately geared up and started to expand in a literal land grab. The year after IPO, it grew its land bank by 75%, investing in a pipeline of developments across 62 cities, up from 25 the previous year. It took scale to a new level, building mini cities rather than just apartment blocks that could accommodate as many as 65,000 people on a single site.
That's a lot of people in one little area.
Yeah. The company raised cash from pre-sales, signing up prospective buyers years before completion, and it also raised debt. So they owe their bondholders $83.5 million. That doesn't seem like much compared to the rest of this. But anyways, will this turn into a systemic crisis? And what are the implications for China's growth outlook? And does it matter to us? An Evergrande bankruptcy could possibly turn into a systemic crisis in China, but at least in the short term, even if that were to happen, it appears unlikely that it will spill directly into the U.S. or the rest of the world.
So there's a few companies like BlackRock, Goldman Sachs, and J.P. Morgan Chase that have small positions, but it's very limited exposure, relatively speaking.
And then even in China, $75 billion in outstanding Evergrande loans sounds like a lot, but it's less than 0.5% of their total banking assets.
So, hard to imagine.
Yeah, so just don't even look at that. When it comes on the news, just shut the TV off.
Yeah, it's not going to affect us, and no one's probably going to China in the next week or two. So
right. I doubt any of our listeners own property in China.
Probably not.
So I had a client in the other day. I was so impressed with this guy. He was a new client. He spent 37 years in the same industry. He got into this industry right out of high school, got a job, like most of us did, because it was expected of us to do that.
We worked.
Or
Yeah,
go to college,
that's what we did.
you know,
Took
that
care
kind
of
of stuff. So he got in a job, and then he saw opportunity to go up the chain, but he had to go get education. So he'd go to the technical school, take some training courses, move up into the next position. So over 37 years, he's moved all the way up to being the supervisor over the department that he started out in right out of high school.
Oh, that's awesome.
37 years in the same career.
Wow.
He's never made more than $100,000, but guess how much he has saved in 37 years? Has one kid, divorced. He has saved $2 million.
Wow.
Yeah, $2 million.
Awesome.
And he said, and I said, man, you need to preach what you've been doing to the rest of the people. And he said, I try to talk to these young people that are coming on board and tell them, look what you can do. Stay the course, get training, move up the food chain, save the max you can save, and invest. He's debt-free. He can do whatever he wants. He's just in a really good place and and really satisfied with what he's accomplished in his career. And he's not anything. He doesn't have a college degree. He didn't go to college. He just started working. And so it's possible to make this happen, but it's all about the choices that you make and what you spend on. He doesn't drive a new car. His house is paid off, and he's going to stay in the house. He'd like to travel a little bit, but he's not going to go on anything extravagant. I mean, he's just a great, normal, happy person. And I was so excited when I saw the numbers. It made my day.
Well, and people like him, we run into people like this all the time, and deep down, most people are pretty decent people and they want to help others. And these are the type of people that want to be mentors. But I think nowadays it's hard to find people to mentor. And, if you have kids or grandkids in your life that are looking for somebody, there's people out there that are willing to help, because there's so many people right now that don't show up to work, that don't want to work. So if you can find somebody that's actually motivated to help, people are willing to help you.
Yeah, especially in the job side. But he said all the time he encourages all the young people and tells them, are you putting money in the 401k? You've got to put money in it. You've got to make a choice over getting a new car every few years. You don't need a new car. These cars now last. The last Honda I had for 12 years. It was fine. I had like 250,000 miles in it. And these cars run long. You don't need to keep moving and buying and spending. And I'm not saying you can't spend on anything, but you need to have a balance between how much you're spending and how much you're saving, because you've got to have a long view. Just yesterday it seems like Randy and I got married. Now we've been married almost 40 years. Time has just flown. And it can get away from you. And if you're not paying attention and doing the right stuff, and if you don't have it kind of on autopilot so that it's getting done for you while you're not even thinking about it, you're going to find that you'll hit the wall at 65 and realize, oh, my gosh, I should have done all these things.
Well, we have a lot of clients that come in and tell us, especially the ones that are successful, that they had somebody early on in their life tell them to do something. Put this money in the Roth. Put this money in your 401k. Just do it and don't ask questions. And, a lot of these people were military, where they listen to their commanders more easily. But we have clients that come in that are in some of these big companies around town, and they're engineers, they're managers, and they have this great life experience. And we talk to them, well, do you tell the younger engineers or the younger people? And sometimes they listen, sometimes they don't. But Sherri and I'd be happy to meet with some groups. So maybe you are someone that's more seasoned at your employment, and you see there's younger people that just aren't quite on the right path. We'd love to come and talk to them and tell them some of the benefits of making sure that you start your 401k early. Just start saving, like Sherri said.
Show
even
them
if
some
it's
projections.
$50 and you put it in every week and you don't pay attention to it, it just starts growing.
Yep. And the other thing I'll mention about because of our son, he was working on the base, and I asked him, I said, you're putting money in TSP, right? And he goes, yeah. I said, what fund? G fund, because everybody I work with is telling me the market's going to crap. And it's like, no, that's when you make money. That's when you're putting in money. When the market goes down, that you're making more money. You're buying more shares. You need to be in the C fund. I said, switch today, please. Do not be in the G fund, because he was working with a lot of older people that were reading the news and freaking out about what was going on at the time. I said, that's to your advantage because you're young. So things change over time, too. So if you want us to look at the portfolio you have, you want us to look at the funds you're in, want us to look at the allocation, we can do that. And we can recommend changes.
Yeah, almost everybody that comes in from the base, we look over their TSP, and somehow we end up usually making some sort of adjustments, because there's the money that you have already in there and how that's allocated, and then the money that you're putting in each paycheck, that can be allocated differently, and sometimes people don't realize one's not where they want it to be. We have all the last 10 years of returns for each of the funds, and we can go through that and what that means to you personally, and how you want to be invested. But sometimes, again, we said having somebody look over your things. A lot of people that I've talked to in the last few weeks that have been on base, they kind of know what's going on with theirs, but they don't ever take time to stop and print it out and look at it.
They're so busy.
Yeah.
They're so busy, and they're so exhausted, and especially if you're raising kids and you're taking care of your parents and you're running ragged, and it's the last thing on your mind, but it's extremely important. And maybe this weekend, take a break, log in, look at what you're look your current allocation of what you're investing in, and then where the money is that's already there, how that's allocated. Because as you get closer to retirement, what I've seen a lot of people do, and I've suggested it to a lot of people that were freaking out, is go ahead and keep your investment allocation of new money the same, but go ahead and take the money that's already in, and you can adjust that and make that more conservative. If you're really, really worried and you're worrying yourself sick over it, you can do something about that.
And the lifestyle funds, the L funds that are in the TSP, and most everybody's 401ks now have different lifestyle funds.
Very common.
But Sherri and I can show you the breakdown of that. And sometimes, I have some people that have come in and been in an L fund on base, and they thought they were invested one way. And they're like, oh, well, I'm more aggressive. And then we realized that 20 or 30% of their investment was still in the G fund. In some cases, they liked that they had part of it that was more conservative. And in some cases, they had no idea they had that much in the G fund, and because they had other money in the G fund, and they wanted to change it. So make an appointment, give us a call, email us. Our office number is 478-922-8100. Give us a call, set up an appointment. Like Sherri said, until, maybe spend this weekend getting your things together. And until you make that appointment to come and see somebody, it usually doesn't kick you into action. But when you're going to meet with us and you have to dig it all up, it's a good opportunity to take a break, take a breather, figure it all out. It's never too early to start saving and planning. And at every age, we will help you craft a plan for what your future would look like. So if you're 20s, 30s, 40s, 50s, at each area there's a different need and a different focus that you have, and we can help you make sure you're on the right track.
Yay, very excellent.
If you want any articles of anything that we've talked about today, email us, Becca, BECCA, at rfmoney.com, or Sherri, SHERRI, at rfmoney.com. We'll be happy to share that with you, or if you have any questions, or sometimes people send us suggestions. If there's things that you'd like us to talk about on the radio show, we'd be happy to, open to some other suggestions. So let us know what you want to hear about.
So the other thing that we deal with a lot, not so much as we used to, but the lump sum versus a pension.
Oh, yeah.
And this is a big deal. It's a huge decision. And I met with a client that's going to come on board in January last week, and he has this issue of lump sum versus the pension. And so you have to do the math. And I have some clients that I've done the math where I've taken the pension payment, basically the monthly amount that you're projected to get, multiply it by 12, and then divide it by the total sum of the pension lump sum, and that gives you the rate of return. And so some pensions I've seen in the past that had rates of return of 6 and 7% lifetime. That's a pretty big deal to be locked into something like that. But if you take the monthly payout, you've got to make sure that you look out for your loved ones and have the option of if you have a spouse, especially if your spouse didn't work much, doesn't have much of a work record, you've got to do the spousal option, so that if something, you cannot plan on not dying. You can't assume just because you're young and healthy that you're not going to die in a year or two. You've got to always prepare for that and realize that you've got to look out for the other people even after you retire. So I've had to arm wrestle with men who wanted to take the 100% pension on their own life and leave, and if they die, the spouse gets nothing. And I'm like, but she doesn't work. How is she going to survive? How is she going to pay the bills? If your money is gone and that's what you guys are living on, you can't do this to her. And I've had people just refuse to listen to me, and I tried my best. I tried for an hour to get them to see the light, and they refused. And most of the people that come see me want to make sure their spouse is going to be taken care of. But there are some outliers out there of people that just are so entrenched in believing they're just going to live forever, and that's not a good way to plan.
Right. And we look at, when we sit down with you and go over your expenses that you have when you get to retirement, or if you're already in retirement, the income you have coming in. And then, like Sherri said, if something happens to one or the other, what's your income going to look like? And
yes.
I mean, you both have worked hard your whole life. And, if you're still married to this person, hopefully you really love them and you want to take care of them. And don't leave them in a situation where they're not going to have enough income to cover things.
Yep.
Another with the lump sum versus the annuity in your pension, if you do keep the lump sum, you have more flexibility in your distribution options, because once you pick a pension and annuitize it, that's what you're stuck with forever. And so like Sherri said, we've had several clients come in and talk to us about this. We run the numbers with you. We talk about what's more important in your situation. Is it more important to have that monthly income or have the control over that lump sum? So if you need it for a home repair or something major, you have it, or health care.
Right. Well, thanks so much for listening today. If you want to call, like Becca said, give us a call at the office and make an appointment, 478-922-8100. Go to our website, check out our special reports, check out the Life Book. If you're bored this weekend and you haven't done any estate planning, that'll give you something to do. If there's a fillable PDF or a downloadable form that you can just print out and fill out. And encourage your family to do the same thing. And there are some tips in there about how to approach your aging parents with these topics, or how to approach your children with these topics, to help you get a conversation going so that you get on the same page with your executor, so they understand the situation, what you've got going on, what they're going to have to deal with, and where everything is. That is the real key. Where is all your stuff? So the book walks you through how to do all of that. So with that, I think our time is up. Just about. He put his hand on the button.
Be sure you take care of your loved ones, like Sherri said, and it may be a little bit uncomfortable getting through initially, but in the end, you'll all be happy that you took care of it.
Yes. Thank you.
Have
Thanks
a great
for
weekend.
listening.
Thanks for listening to Your Money.
The views expressed on this show should not be construed directly or indirectly as an offer to buy or sell any securities or services mentioned herein. Investing is subject to risk, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should only be relied upon when coordinated with individual professional advice. Securities are offered through Royal Alliance Associates Incorporated, member FINRA and SIPC. Advisory services are offered through Rosenberg Financial Group, a registered investor advisor not affiliated with Royal Alliance Associates Incorporated. Offices are located at 2517 Moody Road, Warner Robins, and 4875 Riverside Drive, Suite 201 in Macon. Phone numbers are 922-8100 and 741-4457.